Good morning. Welcome to an episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is execution and impact. Trump's deluge of executive orders or the lack thereof in the case of explicit tariffs triggered bouts of market volatility last week. The greenback softened as fears of outright across-the-board tariffs were toned down, with President Trump threatening just 25% tariffs on Canada and Mexico and 10% on China. Nonetheless, these threats still posed a significant hit on the Canadian dollar as it underperformed G10 peers. Ending last week, Trump's allusion that he'd rather not have to use tariffs on China also added further relief. While US equities continued to surge higher, underlying performances were more differentiated on EV and other energy policies as well as initiatives such as Stargate. In China, equities had a late week surge last week on the reduced tariff threat, despite a rather muted response to the authorities' press conference announcing initiatives for insurers and mutual funds to provide more long-term support for equities. Nonetheless, we should take note that President Trump imposed tariffs on Colombia over the weekend amid a migrant dispute. Last Friday, the Bank of Japan went ahead with their widely expected rate hike and signaled that they could continue to raise rates if the economic outlook pans out. Notably, core inflation in Japan received a significant upgrade in terms of the forecast for FY 2025 from 1.9% to 2.4%. Korea's Q4 GDP was expectedly dismal, growing just 0.1% quarter-on-quarter, strengthening the case for another 25 basis point cut by the BOK at their next meeting. Nonetheless, the Korean won managed to outperform on relief from the lack of clear action on the US-China trade front, reflecting the extent of earlier fears. Meanwhile, the ringgit also performed well last week amid the Bank Negara's badly expected rate hold, with the stance being viewed as supportive of the economy. In neighboring Singapore, inflation prints came in higher than expected, but the need for policy resiliency in the face of mounting growth headwinds saw the MAS opt for a measured easing of the slope of the Sing dollar NEER. This was characterized as being consistent with modest and gradual appreciation path of the Sing dollar NEER policy band. For the upcoming weeks, the FOMC ahead is set up to be a non-event as front-loaded policy moves in late 2024 and recent economic resilience points to a hold, while political noise prevailing over economic signals crimps scope for fresh, meaningful guidance. Meanwhile, the ECB this week is also likely to ease by 25 basis points in an already well-telegraphed decision. All in, under a cloud of uncertainty, one should prepare for the volatility triggered by the vagaries of threats, executive orders, and their associated impact. For more information on the events this week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.